All right, welcome to the Salty Investors. It is Thursday, December the 8th. It's only 2 weeks before Christmas, Tim, but let's not get too cheery because we've got some salt to spill this morning. Um, here's my salt. Maybe it's a little bit out of left field, but do you know who Maxine Waters is? Maxine Waters is one of these octogenarian
Okay.
US politicians. She's 84 years old. Somehow she still gets elected. Now she is all over the internet with some lovely photos of Sam Bankman-Fried being his best friend.
Mhm.
Um, obviously Sam Bankman-Fried being the second largest political donor to the Democrats. She's a Democrat. She's also the head of the Financial Banking Services
Okay.
Oversight Committee. And she has decided that she's not going to call Sam Bankman-Fried to testify on the collapse of crypto that they're going to have hearings on. And that sounds worse than it is because what she wants him to do is come voluntarily. And she has been praising him for his candidness in talking openly about what has happened. Which is really really odd. But this just goes to show you that I mean, the guy is up to his neck
Mhm.
in it with political donations. I mean, here's the thing: she's the head of the Banking and Financial Services Committee. Now that the Republicans have the House on January the 3rd, she will lose that title, so she'll probably be booted from it anyway. But it just goes to show you. I mean,
Yeah.
I don't know if it's her age, but she's just publicly sort of making herself look like a fool. She's been roundly criticised for it, and so she should be.
Mhm.
That's my assault. Any comments, Tim?
Oh, it's just terrible, this revolving door of, you know, spend money in DC to get access to these people that no normal
Mm,
people can get access to, and,
yeah,
just sickening. So,
yeah,
but hopefully this clears it all
yeah,
out. Remember, there's no backstop in crypto. Like
yeah,
you start playing these stupid games, you know,
yeah.
get stupid results. So it's not like
I mean,
zombies in the freaking financial world that can go on forever. So
well, SBF. I mean, he's done a good job of painting himself as the sort of, oh, I didn't know. I didn't know any of. I'm as in the dark as you are. I'm trying to find out stuff as well. I don't know.
I don't think too many people are buying that. Like, I
No,
think
no,
it's just too much money, and then he's already slipped that part of his part of customer funds were sent to these hedge funds, to get extra yield.
yeah,
So
yeah,
I think he's toast. Like, you add up
yeah,
a lot of these crimes, just the wire fraud crime by itself. If you can get
yeah.
Australia, the farmer bro guy away for 4 or 5 years, this guy's going for 20. Like he's really in trouble here. Like,
Yeah,
farmer bro was mucking around with people that are rich. It's got thousands and thousands and thousands of small investors here.
yep,
Wow, he's going to get toast if he ends up in the US. But no one's put any charges towards him, so he's just walking around the
yeah.
Bahamas. This is disgraceful.
Yeah, he's given interviews everywhere. you know, like he's some kind of celebrity.
Oh,
It's funny.
hmm.
Uh,
Oh well, it'll work
funny,
itself out,
funny.
I'm pretty sure. So
Yeah.
yeah,
What do you got on the salt agenda this week?
might sound a bit weird, but I'm trying to defend in the reserve banks. They're getting a little bit of flack at the moment that they're trying to destroy Christmas, and I think that's a bit overdone. Um,
Uh,
you
Phil
know,
the Grinch.
yeah, yeah, yeah. Like, who can we blame for the situation we're in? Like, we have to go back a little bit. Um,
Mm,
Everyone was egging them on to to print money, in COVID. You know,
yeah,
MMT was the flavour of the month, and there's no reason we can't print anymore, and you should be doing it. You don't want people to die, all this sort of crap. And now
yeah,
they're on the other end, trying to reel this back in a little bit, and everyone's losing their minds, and it's
yeah.
still not that high, really.
No.
And I see they got reporters out. Philip Lowe, he's trying to put the bins out the other day. Did you see that? And the reporters are out there
Really?
trying to, yeah, before he's coming out
Uh,
with the meeting and stuff. Like,
uh,
what are you going to do? And just like, leave the guy alone for a little bit, Like, I don't know. So, might
yeah,
sound a bit weird from me.
yeah.
What do you think?
Well, that sort of follows on what I said last week. I was saying that he shouldn't have apologized. You
Yes.
know, He doesn't have to be arrogant about it, but he just shouldn't have apologized for the fact that, he hasn't got a crystal ball and said something that people took the wrong way. It just speaks to financial illiteracy. And, it's what they've done in the last couple of months is exactly what they said they would do, which is they've constantly reiterated, and they did it again in this one. They said about future rate rises anticipated will be data dependent. I mean, this shouldn't be a surprise to anyone.
Yep.
I suppose maybe that's a good segue into the first slide. So they raised interest rates for the eighth month in a row. This was the second 25 basis point rise. So you might say, hey, why don't you just do 50 a couple of months ago? Who knows? The two little so that's a headline from the ABC, but the two little quotes underneath it are from the RBA statement itself, which is, again, it says the exact same. Remember, we had this under forecast inflation print of 6.9. They're still saying they see it going to 8. Doesn't mean it will, but obviously inflation's sticking around. And as we said last time, if you look at if it wasn't for government subsidies on electricity and other things, it would have been way higher anyway. And the board expects to increase interest rates further over the period ahead, but it's not on a preset course. Data dependent, blah blah blah. So prior to the decision, you could see that they had 95% no change for February, because there's no meeting in January, obviously. Post and actually on the 5th of December, they had 100%. Post the meeting, they're more than halfway to saying there'll be another rate rise, 57% in February. So, expectations change. But, I mean, have a look at this chart. Now, the last time we put this up was a month ago. And if you remember then, the market was predicting that cash rate would top out at 3.8. Now it's at 3.6. 2 months ago, it was over 4.
Yep.
So despite more rate rises, the market continues to come down. And, I mean, I think what are they now? 3.1. So that's 50 basis points more than I thought they would do. I think it's more than you thought they would do.
Yeah, it's a lot more. So when if it gets at 3.6, that's going to be an extra 100 on top of what I thought they could get to. So So I have been critical of them. So, but yes, if they do get to that 3.6, it's like, it's going to slow things down a bit. But
I remember I think it was 2 or 3 months ago, that they came out with this language in their monetary policy, not the actual policy decision, but the statement on monetary policy, where they said they wanted to get people accustomed to the idea of rates going up. And so this slowly 25 basis points. Again, it is in keeping with what they sort of said a few months ago. It shouldn't be that surprising, but you're going to see more of that stuff in the media heating up, because there's going to be more and more people feeling mortgage stress as these rate cuts flow through. And you're just going to see more and more of that. And there's going to be a lot of pressure building up on Phil. Phil might be eyeing the exit, He's probably tucked away. He's probably got a pretty healthy super balance, and he's probably looking at the door going, maybe it's time to go. I don't know.
Well, that's one good thing about switching them over. He can do all the dirty work, and give the next guy a clean run. But hopefully he's got the balls here to keep going and actually get up to that sort of number. But still a fair bit of lifting to go. I don't know.
Well, especially if you think there's going to be an 8% number here at some point in inflation.
Oh yeah. And a lot of people on fixed mortgages at the moment still are. And they still are for another. I spoke to a guy the other day, and he's still on for another 2 years. So, but a lot of people only got 6 months left. So that puts us middle of next year, and then you're still going to have a bit of a lag effect on that. So I don't know. Soft landing could still be possible here. What are you sort of thinking? What are you looking at here?
Yeah, I don't know. We can go through all the negatives. I suppose on the positive side, well, it's not so much a positive, I don't think, to crush load immigration into the country, into capital cities, because that's what's going to happen. But that does provide extra demand that might not otherwise be there. So, the economy can probably still do okay, through that period. As we said before, I don't think the governments have, either side of politics, have any idea how to grow the economy other than, crush loading immigration into the country. That seems to be their only fix.
Yep.
And then, they say, oh, look at our GDP, it's above the OECD average. Let's not, though, talk about the general standard of living in the places where all those immigrants end up, which is not to say anything bad about immigrants. It's just the fact that if they all concentrate in, say, like Western Sydney or something like that, it just puts huge pressure on infrastructure, public services, and then we look at our GDP and go, oh, aren't we good? But the standard of living for the people that live there it's pretty horrendous. But
but also the immigrants as well. They're supposed to be coming to a better place, and they're going, wow, isn't the road system crappy and the hospital system is crappy? You're like, it's not this
and
bad.
I can't
normally
get my kid into a school.
That's not good for them either. So just easy runs there for the government, and they can hold back all the infrastructure spend. Like just look at the energy prices at the moment; they're insane. And it's not like we're building anything out here to sort of fix this in the future.
Glencore just pulled a proposed coal mine from Queensland, I think. And by the way, there was a release this morning by the UK government that said that they were going to open a coal mine for the first time in 30 years, because this is called when the rubber meets the road, mate. You've got to get your energy from somewhere.
What's this about? A price cap on coal? I saw someone.
Yeah.
What are they? What's the go with this? Like, how can you put a price cap on it when it's finally getting somewhere? These places are worth nothing. Like Whitehaven coal is worth nothing. Like, even though you price to free cash flow, I think is 1. Like, 1.5 or something like that. It's just insane. It's just, So I don't know.
Price cap on coal, price cap on gas. I mean, do you see a theme here? I mean, it's insanity. The people that run this stuff.
Yeah, what are they going to do? A price cap on brickies and labourers next?
Well, the Greens want price caps on landlords putting rents up at the moment. I just saw that. Then what don't they? Price controls. They haven't studied Jimmy Carter at all, have they? This is what you can do when you're a progressive Green. You can just come out with dumb policies because you have no idea that they've all been tried in the past and failed.
We have to go through that again, I guess. I'm sure.
Yep.
I'm sure it's going to win. Like, it seems to be winning in the court of public opinion at the moment. I can't deny
absolutely.
it. So we're going to get something like that. Very interesting.
All right. So just continuing on the theme of earnings cuts. So this is from FactSet. I think you may have talked about FactSet in the past as a maybe a good company to look at for investment. But they just said that they just gave us sort of a bit of a historical context that in October and November, analysts have lowered their EPS forecast for the fourth quarter, which you won't get until January, February next year for the US, and they've cut them by 5.6%, and they just if you have a look at all the past 20 years, the average cut's sort of somewhere in the range from 2 to 3.5%. So they're cutting more than normal. They're trying to play catch up, as we've said here for months. This is what happens at turning points. Analysts are always slow. And that last paragraph down there is, they're also cutting calendar year 2023. So during that same period, they cut calendar year 23 by 3.6%. Down to 232 from 241. That's not much. And I mean, if that's all the cuts were, you'd be buying. You'd be buying, wouldn't you? Because 232, the S&P looks pretty cheap on those numbers. What is it, about 17, 18 times? Well, not cheap, but not expensive.
Yes.
But as we've said here, I expect calendar year 23 to come down to about 200, or even a little bit below. I think Morgan Stanley's at 195, something like that. We had that up here a couple of weeks ago. So yeah, just the ongoing revision to earnings. When is that going to all get priced in? Don't know. Who knows? Maybe we're all going to look forward to 2024 when quantitative easing's back on and it's back to off to the races again. I don't know.
Yeah.
What do you reckon?
Well, Bitcoin's looking fine and dandy. If you want to look at who's looking forward, you can't even get below $17,000 at the moment. There's
very stubborn, isn't it? Doesn't want to go down.
So you're looking for a forward asset, risk asset. Wow, you can't get anything more crazy than that. And someone's buying here. Who the hell is buying here? You should see the miners. Everyone's dumping, and because the miners can't keep up with all the fuel prices and electricity prices. So it's got a flaw in it.
I've never. I don't keep abreast of what it costs to mine a Bitcoin these days. But is mine the coin more expensive than what it's worth? Is that what we're saying?
It's still not at the moment, but it depends on your capex that you're spending on, how forward, how much do you depreciate the miners? So the electricity costs, if you own the miner, but the problem is the hash rate, which is how hard it is to mine a Bitcoin, keeps increasing. So you've got to keep upgrading your miners. And so you might only get 1 or 2 years before the efficiency drops enough where you have to upgrade. Yeah. So you got to do a couple of equations here. You know what the supply is going to be, but you don't know what the hash rate is going to be in 12, 24 months. So a lot of these miners basically held on to all this Bitcoin because you could turn into $1 billion company if you could, don't actually sell any Bitcoin and then absorb all those costs with low debt. You're buying debt at 4% or whatever, or 8% if you got nothing to back it up with. And then just hold that Bitcoin. But now it's like, oh, no, we want you to have some cash flow and pay back some of this debt. So
is it feasible that at some point the cost of mining Bitcoin, whether the costs go up enough or whether Bitcoin comes down enough or both, that the cost of mining Bitcoin is so prohibitive that they just stop mining it?
Yeah.
And they just
lower prices lead to higher prices. It's the same as any other commodity life cycle. So they're the best times to invest because it looks so terrible that you've got everybody, leaving the industry, thinking, this is the end. We haven't got there yet, but I've been through, 3 or 4 of these. They're actually, because you look at you try to forecast the future and you're looking at this going, this is just horrendous. Why would you be spending electricity on something that never going to make a return? But from equities, the same argument comes in because it's been oversold. So they're actually the best times to invest. But I don't know. We've got a few more. Next year is going to be, as things tighten up, might actually become something decent to invest in again. But and we need the SEC to come in and ban a few of these other, securities, and you'll see the rats flee out of there, and they'll flee into something that's a bit more secure. But they won't want to go to fiat, so they'll flee into something that's actually got some alpha behind it. They're not going to flee into the USD stable coins. So a percentage will, but so there's all these interesting dynamics playing out at the moment. But we've still got a year and a bit till the next halving. So we've got probably a year after that. So we're looking 2025 is when we're probably going to get a next bull run if past things happen. So
is any good? Yep.
So it's going to be interesting. We should do a more of a Bitcoin one because I'm a bit of a Bitcoin bull and you're sort of
Well, I'm a Bitcoin idiot, really. I just don't really.
It's very hard to be a value investor and go, oh yeah, I'm into Bitcoin as well. It might sound, totally illogical. So I might have a
Well, I mean, as far as I understand it, though, we don't have to get into this today. But as you know, my constant question is how do I value Bitcoin? But you're not investing on a sort of. You're not saying, oh, I think Bitcoin's worth 50,000 based on my estimate of its value. You're saying this is an insurance policy when the shit hits the fan. You're not actually putting a value on it, are you? You're just, it's like a, yeah.
Yeah.
Okay.
It's like a black swan type,
Yep.
yeah, thing. So, or grey swan or whatever you want to call them.
Yep.
So a lot of these things, because it's not an income producing asset, you can get carried away here thinking, the future is going to be this or whatever, but just the alpha that you can get from this from an uncorrelated asset. I know it's very highly correlated at the moment, but if things go crazy, yes, it's one of these assets that can really perform. And then risk on as well, as you noted from the last couple of years of the internet.
Yeah.
What's happened here. So,
well, all it has to do is really keep its correlation with the S&P, and the market's going to turn around at some point. Do we expect the correlation just to break down because that's what you're expected to believe if you think that all crypto is garbage and it's going to zero? You have to expect that correlation is going to break down for some reason.
yes.
Yeah.
It's like QQQ on steroids. Like, a 10x or a, QQQ,
10 times 11.
Yeah. And so that's what you're basically getting in the near term. But I'm thinking more 20, 30, 40 years out for a better asset. And you think, people go, oh, what's going to happen then? Well, yeah, things get a little bit more dicey. You cannot predict. Things are a lot harder to predict back out to that sort of timeline. So, yeah, it'd be very interesting to have a talk about at some stage. I think it'll be very interesting.
Yeah. All right. Now, moving on, you have found yourself a guy called Chris Holm. So is this his entire portfolio? He has 10 stocks. It's a very concentrated portfolio. Yeah. And
I've looked on his past history, and he dabbles around, special situations. I don't know if you know what they are, but, like really high IQ type like work you have to do and super complicated type analysis. And he's mucked around with, Seth Carman type, work, which is, very hard, for an average investor to grasp. A lot of it is impossible for a normal investor to grasp. So, this is the league this guy's in. And now you can see that he is, as we're going into a possible recession, how he is restructuring. And you can see this continues to sell down out of stuff. This Boston properties here. And there's just, like I can see, like what I'm looking at it as a moat type business, like moat type fund here. And the thing that grabbed me is like, he grabs the oligopoly type things here. He grabs both of the top. So he's got Alphabet and Microsoft. He's got both of the railways in Canada. So it doesn't matter which one wins, he's going to get on top. He hasn't got Visa and MasterCard, but you can see he's got Moody's and S&P.
Oh, he's got Visa.
Yeah, but he doesn't have the dual. So normal. So this is the strategy is like straddling both the oligopolies, and you think how much money would I have to put in here to take out one of the Canadian railways? Like there's just $500 billion. I couldn't take these guys out. Alphabet and Microsoft. We've talked about these, how strong they are. But S&P Global and Moody's has got Finch. You've got Finch in there as well, but that's private.
Fitch, you mean?
Finch, yeah. Finch, sorry, yeah. And so you can't really, compete against these guys. I looked it up, and, if you go and get another credit agency, you've got to pay an extra couple of points, So people don't even want to use other credit agencies at all. So I don't know.
I mean, if the complete scandal of, fake ratings in '08 couldn't destroy. I mean, it was fascinating to me that these companies didn't go away. I mean, for clearly fraudulent ratings being paid by the people issuing the securities. And by the way, there was I think maybe I've mentioned this before, there is another model out there called Egan Ratings. I don't know if he's still around, but he got paid by the investors rather than the issuers, which I would have thought was a better model.
Yeah.
Right. But hey,
Yeah, you just can't beat these guys. So I don't know. But there's BlackRock in there as well as well, so with this couple of others. But,
Mm.
I'm just looking at this portfolio and thinking, wow, like I can't really poke holes in it. And going forward in an uncertain environment, like,
Yeah.
he's got the railroads balanced with the tech here, and it's got a few credit rating, and they're going to get hammered a little bit, but they're going to come out the other side. Like I just can't see what's going to fall over here. So what do you think of this
Yeah.
dual, take both the oligopolies and pick both of them? Like, it doesn't even matter about the returns. Like, you're sort of going,
Yeah.
it's like a hedge within oligopoly type.
Yeah. I wonder, would Amazon be the sort of
Yes.
natural, if you're talking about web services where, I mean, Amazon, which stumbled into that business, now it's its best growth engine, right?
Hmm.
And it's also Microsoft's best growing, 30% a
Yes.
year over year. Yeah, so
But
it's
why isn't
interesting.
Amazon in here? Like, that's the other question I
Yeah,
got. Like you look at all how strong these are, the oligopolies, and you think, why isn't he in Amazon here? Like, and
yeah.
especially the price has corrected so much. Like, surely he should be dipping in. But
Does he talk about publicly what he does? Does he put out a newsletter or anything, or
he's
not
got
really?
some of the best analysts. I looked up his team, and I'm like, wow, like I
Mm.
couldn't even get there, in 5 years' time. I couldn't even get on his books here. Like,
Yeah,
the specialization, you know, like he was. This is some of the letters that he's written in the past. He's written, we looked at his Google one.
yeah,
Obviously, not everyone's just ignoring all that. The the wages that everyone pays, and he's written an open letter. But you should see the letter I read to Wirecard. Do you remember Wirecard? It was a German type
yeah,
company that was involved in all this fraud, and he
yeah,
was looking in deep into that. And I'm like, wow, this guy has like got some of the best analysts in the planet working for him, and so that's got me worried about Amazon. That's what I'm like, wow, like why
mm,
isn't Amazon on the list here? Like,
no. Well, I mean, does he deliberately keep it to 10, or is it because
no,
does
no,
it go
no,
up and down like
yeah, yeah, he goes
12
up and
or
down. So,
okay, yeah,
but I'm really encouraged to see that some people have got really high conviction here, and can really
mm,
run. You look at the size of this fund,
yeah,
and he's not.
yeah.
He charges a heap. Like he's on a 1.5% clip here.
Wow, yeah,
So, like, and he's like got
yeah. Well, I
railroads
mean,
in there, so he's not like going for growth and trying to do something risky here. So, like,
of course, we've made a virtue out of diversification, and it is a virtue, and people should be diversified. But I think, recent years people have got carried away with that, which means that you should have, diversification out to the wazoo. I mean, all the research shows that once you get to somewhere between 15 and 20 stocks, you've already got market risk diversification with
yes,
15 or 20 stocks. So, yeah, it makes your job easier too if you're
yeah,
imagine you're really concentrating on, you've got a very limited universe of stocks to look at because you've got pretty strict criteria, and you've only got to sort of manage 10 or 12 names. Yeah,
well, look, all
makes your
these
job a bit easier.
stocks, I can look out 10 years and go
Yep.
like these railways and go, yeah, I'm pretty sure it doesn't matter what sort of we're going to get free power or they still need to get stuff from the ports. It's going to be the cheapest way. Doesn't matter about
Yep.
Tesla, what they're doing, interest rates, you're just looking at these things and thinking, wow, like I can look at 10 years and I can probably do a discount cash flow for, 15, 20 years or whatever you want, you're like, that's what Buffett
Yep.
talks about, you're holding something for eternity, like you can actually do a proper discount cash flow on these things, even if low growth.
Yep.
You got the certainty there. And I think going into this bit of a rough period, he's going to do well. But I'll be interested to see if he sells out of Google here a little bit to frighten them. Because you look at those numbers, like he's got some huge numbers on these things. And if you're
Yeah.
a CEO and you're seeing this guy work, he's going to go against you because he's an activist. He's an old activist type investor.
Right.
So he doesn't do that anymore. But like you don't want to fire up that spirit in him, do you? Really?
$5 billion position. Yeah.
Like he's going to really hurt you. Like,
Yeah.
so everybody's going to panic. Like this guy moves against you. So yeah, just some guy that I don't believe he's politics or anything like that, but I just love the way he's just constructed this.
Mm.
I just can't put a fault on it. So
yeah. All right. We got anything else on the agenda? I think we might end it there, shall we?
yep,
Yeah.
sounds good.
All right. Thanks everybody for listening. We have been the Salty Investors, and we will catch you next time.